Let's move on and now let's discuss what are the newsmakers, where is the market headed, and what are the company fundamentals like. And let's now discuss and throw light on what is the prospect of Titagarh Railways going forward. Let's just welcome on board the management as well. Just so much happening within that sector. We have with us Umesh Chowdhary, the Vice Chairman and MD of Titagarh Rail Systems, joining in on the show right now. Umesh, hi. Thanks so much for taking the time out and joining in today on ET Now Morning. Firstly, let me first talk about the recent QIP, the fundraise of 700 crore rupees where marquee investors have participated. How is it that you're planning to utilize and deploy these funds?
Very good morning. Always a pleasure being with you. Yeah, there is a lot happening in this sector, and the whole infrastructure story in India is, I believe, just about beginning. And coupled with that, the Make in India and Atmanirbhar Bharat policies of the government have really been a big booster for industries like us, manufacturing industries who are in the infrastructure space like us. And we are directly, a result of or whatever we are being able to do is directly a result of that. In terms of the QIP, we're very honored, very humbled. We have received a very good response from, as you said, with extremely the marqueest of the marquee investors. And the purposes of the fund utilization have already been announced. Part of it is to repay debt, part of it is for the long-term working capital, etc. And we are also, as not only for the QIP, but as an overall growth plan, we are now setting up additional lines to manufacture the Vande Bharat coach, which will, of course, require substantial capex. We signed the agreement with ABB, the cooperation agreement, the strategic partnership agreement, where we are setting up the entire propulsion and the TCMS manufacturing. So a lot happening in the sector, as you very rightly summed it up.
So in terms of your total fund requirement for the capex post the QIP, can I say that you don't need capital for next 2-3 years?
Yeah. So as far as the current plans are concerned, whether it's the Vande Bharat, whether it's the ongoing projects that we have, we believe that for both the capex and the working capital, apart from the debt that will need to be taken for both, to some extent, the working capital, etc., that we should be well funded at least for the next 2-3 years. And of course, but what I would like to put the caveat that is for what we are doing now, what we have in the visibility now, but the government or the country is moving so fast. 1 year ago, we did not know that Vande Bharat would be such a great opportunity. 1 year ago, we did not know that wheels will be produced in India. 1 year ago, we did not know that freight targets would be, or 2 years ago, we did not know that freight targets would be set to 3 billion tons. So, of course, we need to keep pace with the kind of speed that the Honorable Prime Minister and the government is taking the country forward with. So I can only speak at this point of time where we are today, what we have planned today, we should be well funded, as we are also generating cash from our existing operations.
So how is it that you're trying to cash in on this, boom in opportunity, if one can call it that? Because recently also the Railways has floated that tender for the procurement of those 20,000, new wagons. I guess the delivery is slated between July 24th to December 25th. And then, like you're saying, Vande Bharat is a sizable opportunity as well. What is the status on the contracts that you have bid for or tenders in the pipeline that you're working with?
So, as I mentioned that there are opportunities, and it's very important that companies at such junctures are careful of doing what they do. And as far as we are concerned, we have an order book pipeline which we already have for almost about 2.5 years for the freight wagon side. So the tenders of the 20,000 or the additional 10,000, or as we hear from newspaper reports, there is going to be additional tenders coming out very soon. So all of that we are bidding on the basis of our available capacity, so that we don't want to overcommit and underdeliver. That also comes with its own financial consequences, apart from reputational consequences. So it's like opportunities right now are like buses on a bus stop. Every 5 minutes there's another one coming in. So which one do we get into without injuring ourselves is what we have to choose.
With so many buses is that lead to traffic jam, and traffic jam in your terminology is competition, right? I spoke to one of your peers yesterday and they said, look, we are looking at expanding in the high-end wagon category. You are doing the same. Isn't there going to be like competition? Because if the pie is so large, even global players could come in now.
So competition is not a bad thing always. Competition is a good thing. It keeps people on their toes. And, as you said yourself, you answered the question, actually, the pie is so large because everybody has a share of the pie. And I believe that what we are looking at is being most cost effective, most competitive. So, we are not today, or we never will be in a monopolistic industry, nor do we want to be. So competition is there and competition will remain there. And as long as we can stay ahead of the curve in terms of keeping our own competitiveness, we don't care about it.
What is the pattern in government payment and orders? There was a time when the government orders were, in a sense, not very popular with corporate sector because there was endless delay in terms of payment and receivables. Has that situation improved?
That actually is the situation that was there more on EPC contracts. We are not in EPC business at all. We are into supply contracts, and our procurements, touch wood, for the last 26 years that I've been in this business, the railways are a very responsible buyer. They are a very efficient buyer. We've not had delays in payments. I'm not talking about a few days on quarter ends or year ends, etc. That's a normal thing that happens in industry or in commerce. But on a larger basis, our industry, where even our price variation formula, you don't need to kind of involve any mind into it. It's the SAP can actually calculate it. So everything is very well defined, what I'm trying to say. There is no ambiguity in the contracts. There is no kind of negotiations that need to be done for settling invoices. That's where I understand. And I don't know too much about the EPC business, so I'm just saying based on my understanding, that's where the delays actually happen. It's not something which is in our industry.
Yours is what structured against LC, which is that as you deliver, you get advance and then you get the full payment. Is that how structuring is done?
We have from the railway contracts an option for LC, but even if you do not take the LC, because that entails costs, the payments happen after delivery in a certain number of days.
Umesh, what's the risk to your business? And you were talking about the frequency of buses coming in at the stop. Could this really slow down with the upcoming elections, for instance?
I'm not a crystal ball gazer, but I think India as a story is I believe in the Newton's law of motion. Everything in the state of motion will continue to be in motion. So I don't see that happening in India, because I believe India's time has come. India is and the way the situations are, for my sector, for the railway sector, India, in order to become a 5 trillion, 10 trillion, $30 trillion economy, the logistics cost has to come down from the current 14% to 9%. And that cannot come out by magic. It has to come out by efforts. And that effort is basically moving the road and air to rail and water. So I don't see that there should be a challenge. On the passenger side, people are continuing to travel. We see the kind of congestions that are there in the airports. Ticket prices have soared. So if there is a viable, comfortable, safe alternate available, even a person like me would love to travel by the new Vande Bharat that we are now building. So in June 25, when we launch the Vande Bharat, we would really be happy if the people ditch aircraft or air travel to go by Vande Bharat. So I think that the infrastructure story, the aspirations of the young India is so large that the sector that we don't see that should get impacted.
And I just wanted to get in a sense as well from you on your margin picture, because the last quarter they swelled up to about 2.3%, and that was largely aided by the operating leverage. What is the outlook in terms of your margins? Do you think that given there is a lot of intense competition, that perhaps it could continue to remain at these levels?
So we operate in two business segments, the freight and the passenger. On the freight, the normalized margin is about 11, 12%. The margins can differ on a quarter-to-quarter basis, and that's really not a very strong benchmark, because when you deliver a certain set of contracts, which may be to a certain set of customers, the margins might be higher than that. But on a blended basis over, let's say, 4, 6, 8 quarters, the margins in the freight business, with the kind of operating leverage that we have been able to achieve, should be in the vicinity of about 12%. A couple of points here or there, not percentage, but just decimal points here or there. In terms of the passenger business, we are just about starting. We've just again seed off. We still have not hit the runway to kind of take off. We're doing about 3-4 coaches per month right now, which we are delivering the Pune Metro. Then we will be having the Bangalore through CRRC, then the Surat and Ahmedabad, then the Vande Bharat. The capacity that we are planning is to get up to 72 coaches a month. So obviously, that's when we reach that, then we can talk about operating leverages kicking in, and also the TCMS and the propulsion business that we are going to backward integrate with. So that's a business that typically should give us a slightly better margin once we have completed the entire picture. But that's going to take a couple of years.
You are in railway business and you're talking about bus. Now you're talking about airlines and taxi and runway. Are you looking at diversification? Should I be aware of something?
That's competition for me, not competitors.
We'd love to actually not fly to somewhere, given the kind of prices and how chaotic airports have become. And next time try Vande Bharat.
Actually,
right?
the experience of Vande Bharat and even stations.
Yeah.
I mean, it's just becoming
dramatically different than what it used to be. Yeah.
It's all like, it's like a cycle which has changed completely. So now you don't have to really run on the platform. Remember the DDLJ platforms? Those days are gone, at least in our lives now. I mean, they are real, sober, nice, swanky platforms.
There's a downside to everything, and you don't have the DDLJ experience now.
But I guess you have the Insta-worthy moments now, so that's more than making up. All right, good to have you on board. Thank you so much for giving us a better insight into the business and how things are shaping up. That's the word coming in from Titagarh.